You're listening to AI PRISM from Seoul Economic Daily.
It's Monday, May 18th. I'd like to share some thoughts about Front Page Daily. Right now, the South Korean stock market is up nearly 80%. But, at the exact same time, the government is threatening to freeze corporate strikes and billion-dollar beauty brands are being sold off for parts.
Yeah, it's quite the paradox.
Right. So today we are taking a deep dive into this paradox in the South Korean economy because you've got this powerful momentum driving the headlines, but right under the surface, things are kind of fracturing in real time.
They really are. And, that tension between massive scale and the ground level reality is really peaking right now with Samsung Electronics.
Yeah.
So they're facing these May 18 labor talks.
Okay.
And the stakes have become so incredibly high that Prime Minister Kim Min-seok publicly threatened an emergency adjustment.
Wait, an emergency adjustment. For the listener who maybe doesn't follow South Korean labor law, that's not just a stern warning, right? Mechanically, what does that actually mean?
Oh, right. Well, it's a very rare, highly controversial legal power. It essentially allows the government to just forcibly suspend a strike and mandate binding arbitration.
Wow, so they're treating a corporate labor dispute like a national security crisis.
Exactly. The pressure is so immense that Chairman Lee Jae-yong actually cut short an overseas trip just to deliver a sudden public apology.
Huh. And to really grasp why the government is pulling the fire alarm here, you have to understand the K-ball system, right? These massive family-run conglomerates that basically dominate Korea's economy. Samsung alone is 12.5% of the entire country's GDP.
Yeah, 12.5% is just massive.
But what's the specific threat? Why not just let the labor talks play out normally?
Well, it all comes down to the global AI supply chain, right? Samsung is a critical pillar for memory chips.
Oh, sure.
So if they halt production, the ripple effects hit literally everything, from your smartphone to, massive global data centers. The government basically believes Samsung's scale makes it just too big to fail.
Right. So we have this massive conglomerate flexing its industrial muscle, proving that scale is everything. But, looking at our notes on the consumer sector, it paints the exact opposite picture. So what exactly happened with the K-beauty brand Dr.Jart plus Serum?
Oh, this is a fascinating reversal of power. Yeah. So back in 2019, the global giant Estée Lauder bought Dr.Jart plus for over 1 trillion won, which that was about $700 million at the time.
Okay, 700 million.
Yeah. And today, after years of just plummeting sales, a Korean private equity firm called PTA Partners is actually eyeing a buyout.
And the new price tag is what?
A mere 200 billion won, so roughly $140 million.
Wait, really? That's an 80% drop in value.
Yeah, an 80% drop.
Imagine buying an asset for $700 million and just watching it vaporize like that in 5 years. What broke down there mechanically? I know Estée Lauder struggled to manage, culturally specific marketing once they took over, but surely there's more to it than just bad management.
Right. It's less about mismanagement and more about, the infrastructure of the ecosystem itself. In South Korea, indie beauty manufacturing moves at just a breakneck pace.
Really fast turnover.
Exactly. The local infrastructure can churn out new formulas, adapt to viral trends, and serve literally hundreds of small, agile brands simultaneously.
Oh, wow.
And a Western conglomerate like Estée Lauder, they're built for sheer scale, not speed.
Mm-hmm.
By the time they pivot a massive ship to catch a trend, those nimble Korean indie brands have already captured the market and moved on.
So in this case, agility is actually destroying scale.
Yeah, completely. And that massive disconnect, right, between the initial high-flying corporate valuations and these fast-moving ground-level realities, it's perfectly mirroring this paradox that's tearing through Korea's financial markets right now.
Let's break down that market anomaly then, because looking at the numbers, they totally contradict each other. You've got the KOSPI equity index surging almost 78%, but at the exact same time, government bond yields are spiking. And normally, those shouldn't be rising together, right?
You're absolutely right, they shouldn't. The KOSPI is flying high almost entirely because of this semiconductor supercycle. Basically, this explosion in global demand for AI chips is driving massive revenue projections for tech giants.
Sure.
But simultaneously, global inflation is forcing government bond yields up.
Right, and the spread over the Bank of Korea's policy rate is now the widest it's been since the Legoland incident. Let's unpack that jargon for a second. So what does that spread actually mean for the listener?
Okay, so the spread is simply the gap between the baseline interest rate set by the central bank and what it actually costs to borrow money in the real market. When that gap blows up, it basically means credit is freezing.
Wow. And the Legoland incident.
Right. So the last time it was this wide was the 2022 Legoland incident. That's when a local government defaulted on debt linked to a theme park, which just sparked this massive panic and a sudden credit crunch across the whole country.
So money is incredibly expensive to borrow right now. Which really brings us to the real fracture here. You've got asset owners getting richer from this equity boom, but everyday consumers with variable rate mortgages are just being squeezed dry by rising loan rates.
Yeah, I mean, that is the literal definition of a K-shaped economy.
Right, the letter K.
Exactly.
Yeah.
The top half of the K shoots up with asset inflation and tech booms, while the bottom half of the K sinks under the weight of high interest rates and expensive debt.
It really makes you wonder about the long-term stability here, because if South Korea is a leading indicator for global markets, what exactly happens to all these highly leveraged households if this AI tech boom suddenly cools off, but inflation keeps interest rates elevated?
Well, that is the billion-dollar question. You're left with an economy built on sheer momentum, with absolutely no safety net underneath the people holding the debt.
That's today's AI PRISM Front Page Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Won-IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.